In 1989, Warren Buffett invested in Wells Fargo, a leading bank in the US that earned him around $10 billion. People often say that history does not repeat, but what if we tell you today that history does rhyme? Good afternoon, ladies and gentlemen. We're here today to issue a buy recommendation on Vietnam Technological and Commercial Joint Stock Bank, or Techcombank, with a target price of 35,300 VD per share, representing 37% upside. So let's take a quick look at Techcombank. 3/4 of its income comes from lending activity, 70% of which is allocated to real estate financing, while partnering with leaders in the RE and FMCG market. So what factors make a buy recommendation on Techcombank? The first one, a well-constructed core business. Second, solid financial foundation. And third, attractive valuation. Now let's come to the first point. While dark clouds are spreading all over the RE market, including legal issues, gloomy demand, and financing stagnation, we believe Techcombank can resiliently overcome these hurdles and head for long-term growth with a well-constructed core business of supply chain financing. It has formed a closed and highly secure chain, partnering with Vinhomes, and while putting affluent customers at the back of the chain to push and maintain the flow of money within the system. And with Vinhomes' project pipeline until 2025, we forecast Techcombank's recom and mortgage loan to reach 10.8 and 20.5% CAGR by 2026. However, this is only a part of a bigger plan. Lending is not the final destination of Techcombank, but beyond that is a vision to tap into wealth management, one of the fastest growing sectors in Vietnam, with the market size projected to more than triple by 2030. And Techcombank is not reactive. They are proactive in this vision by knowing exactly what they want right in the beginning. Techcombank is doing what other banks cannot do in the meantime, by forming a well-constructed core business that gives them the exposure to an affluent customer base, while partnership with Vinhomes and an internal ecosystem that help to manage their money. And Techcombank actions are proving that they are heading toward that goal step by step by mapping out the contribution of fee income to account for 30% of total operating income by 2025. Now let's come to the second point.
Before capturing long-term growth, Techcombank must first survive short-term headwinds, and it is well able to do that with a solid financial foundation driven by strict loan underwriting standards and a thick capital cushion. First, Techcombank's stringent appraisal allows it to enjoy a 200% collateral coverage, but what makes Techcombank different is that most of its collateral are high-quality real estate, which hold its value even in case of fire sale. We expect over-collateralization to reduce the need for provisioning, yet Techcombank remains extra prudent on that front. Second, Techcombank can absorb any unexpected credit losses with its thick capital cushion, which is not only well above the current requirements, but also the highest in the entire industry. Together, we expect Techcombank to keep its credit cost at a low level, which is not a hinder to its profitability going forward, even in the worst case scenario. So far, we have addressed the question of why Techcombank, and it is now time for another important question. Why Techcombank right now? We believe that its attractive valuation is exactly the answer. First, we believe that this entry point has extremely low downside risk. It is because the majority of bad news has been priced in to Techcombank's valuation, and even the ones that does not directly affect its operation. And the deep discount of this year to rock bottom, while painful, but has also created such a wonderful risk-to-reward outlook for next year, making right now the perfect entry point. The second reason for its attractive valuation is clear growth visibility, which we have discussed in previous points, and a combination combination of both limited downside risk and high growth potential has created a once-in-a-lifetime chance to buy Techcombank, and you guys would not want to miss that.
So now we're going to take a deeper analysis into Techcombank's financial pictures to identify its short-term pressures before heading for a brighter future. First and foremost, regarding profitabilities, the net interest margin will face a short-term downward pressures because of the increase in deposit rate and the financial burdens of the 1 billion overseas floating loan. However, we believe this loan will have Techcombank to maintain its liquidity position, especially when the market is really in thirst of capital. In the medium term, the net interest margin will be forecast to revert back to 5% due to a decrease in the cost of funds. Moreover, the compound annual growth in total operating income was attributed to stable net interest income from the prestigious client within the ecosystem and the high contributions of net fee income from its core business. Secondly, regarding the equity multiplier, Techcombank was able to maintain a lower equity multiplier, allowing the bank to have a higher, more sustainable, and less volatile return multiplier compared to its peers. Last but not least, regarding the asset quality, the NPL is forecast to face short-term upward pressures, but will still remain in the safe zone due to the sustainable supply chain financing system and the stringent appraisal process, proven by sufficient maximum discounted collateral to loan value.
So from above investment highlights, we have arrived at one-year target price for Techcombank of 35,300 BND, presenting 37% upside using residual income model and relative valuation. Regarding residual income model, our cost of equity is calculated at 15.2% and terminal growth rate is 2.5%. Our interest income assumption based on loan balance and deposit balance times assets earning yields and deposit yields to get net interest income. We believe Techcombank will sustain the net interest income in this high interest rate environment and see a potential growth from 2024. Meanwhile, the net fee income will grow at 17.8% CAGR, driven by the cross-sell opportunity between SME and retail clients. For relative valuation, our peer selection based on business model, risk appetite, and asset side. We arrive at target PB for Techcombank is 1.06 times to get 33,800 BND. We also run scenario analysis with main assumption based on net interest margin, loan growth, cost management, and PB. Our analysis revealed a bull case of 14,800 BND and bear case of 31,500 BND.
So, despite the potential upside, we acknowledge that investing in banking stock during the economic downturn is quite risky. We identify liquidity and bond market as two key risks to Techcombank valuation. Regarding liquidity, due to the widening gap between credit and deposit growth, the pure LDRs of Techcombank and total industry has reached the alarming threshold. This creates a rising deposit rate, leading to a rising cost of funds and constrain the credit growth. Regarding bond market, liquidity 65 and variation related to bond issuers, namely VATIFAT, has competitive maturity for the investor and attract directly to Techcombank IB activities. In addition, DCBF, a bond fund managed by Techcom Capital, has witnessed a remarkable downside due to the net withdrawal and panic selling on the bond market. This leads to a wave of confusion among Techcombank customers about the products provided by the bank, and affected badly to the reputation and cross-selling strategy in the future. Moving to ESG, Techcombank has recorded a total score of 0.63, representing good performance compared to peers. The highlight is that Techcombank has made a good dedication to the HR benefits. Its employee is the highest paid in the entire banking industry.
So all in all, tech cushion, core business, and bargaining pride are the three key factors that will put Techcombank at the forefront to capture growth. Back in the 90s, Warren Buffett also bought Wells Fargo based on these three reasons, and while the market is highly endowed of it. So are you ready for the return of history? Because Techcombank is the bank